Assalamu alaikum. Welcome to another enlightening episode of Property Focus. I'm your host, Peter Ngigi, and today we embark on a journey into the world of Sharia-compliant investments, focusing specifically on real estate investment trusts or REITs. In today's Islamic Executive Morning Summit themed Unlocking Ethical and Halal Investment Opportunities through Sharia-compliant REITs, we have gathered an esteemed group of participants and speakers who will guide us through the various aspects of REITs that align with the Islamic finance principles. The event kicked off bright and early at 7:30 a.m. with registration, allowing the guests to mingle and network over a delightful selection of tea and light refreshments. And in keeping with the theme, all the food that was served, of course, halal, ensuring that all the participants felt comfortable and at ease as they engaged with one another. Our first speaker, Mr. Brian Figa from the Nairobi Securities Exchange, illuminated the concept of REITs, explaining not only what they are, but also how they serve as a powerful investment and fundraising opportunity for the Islamic community here in Kenya.
REITs in full stands for Real Estate Investment Trust. So the real estate side we're familiar with. The investment trust is what is strange sounding to many Kenyans and many people. But really, what an investment trust is, it's just a circle that invests in things. So in this case, you're just saying, we have a circle here that is investing in real estate, that is, put those two things together, we have a REIT. The beauty about it is that the difference between this REIT and your local chama is that the REITs here, where we put our money, it is a regulated vehicle. When you put your money into it, you get shares into a company. Now, because when you put your money, you're getting shares into it, it means this company can then be listed on the NSE. So that if, for instance, we all put our money today and one of us tomorrow had an emergency, they wouldn't come to us to give them money. They would simply go to the exchange and sell their shares into this pooled vehicle. And then on the opposite side, after we've pulled this money, we go look for proper real estate. Two ways we can do it. We can go look for a real estate that is already built. We can already see it as tenants. Then we'll be collecting rental income from it. Or alternatively, we can go look for land that is not built, build something on it, then sell to people. Then when you get the profits, we share amongst ourselves. That's the whole mechanics of REITs, and that's why it is a good tool. Now, to think about why Kenyans should use it. First of all, Kenyans, we know about real estate. The way we do it is we invest directly. Nowadays, we even see people coming up with chamas and we invest in real estate. The problem there becomes, first of all, we all know how hard it is to sell liquidity, to sell real estate. If you bought land today, you might look far and wide for someone to sell to. But because we are saying this company that we've created is traded on the exchange, it means buying and selling is like buying and selling other shares. It's not any different to that. So now it means you are able to achieve liquidity from property other than you investing directly into it. Another important thing is that because property tends to be capital, it tends to require a lot of capital upfront. It means by us pulling our money together, we are able to afford large property sizes. And not just that, we may be able to buy different properties, meaning that if one property in 1 year did not have enough tenants, it's subsidized by the others. So we get to achieve diversification, because if you yourself have to invest in property, you'd likely just buy one building. But us put together, we can buy many. So again, that is why people should consider it. And as a sweetener, as if all these benefits are not enough, there are also some tax benefits. I think the big one is if you sell your property directly, you would pay a capital gains tax. If you bought the property at 1 million and you sold it at 2 million, you'd pay a capital gains tax on your gain. But if you bought into REIT shares at 1 million and sold the shares at 2 million, because they are traded on the exchange, shares are not subject to capital gains tax. So you can see it is a cleaner way to generate your wealth and value creation for you. And that is just one of the sweeteners that is there for REITs. There are a couple more. So I'd like to encourage Kenyans first to look at it as a viable wealth creation tool. It's an investment opportunity, a cleaner way to invest in property. And also on the other side, I'd like to encourage property developers who are looking to raise money. It's not just bank financing that's out there. On this other side, we have Kenyans looking for opportunities. come and do this project through a REIT, invite Kenyans to build their wealth through it. So that's the rallying call I'd like to give to people. In our market currently, we do have 4 REITs. The first one and the oldest one is called the Fahari REIT. It does own a couple of projects in various properties in various segments. So it has an office block. It also has some commercial spaces. Its most famous investment is Green Park Mall in Donholm. So that REIT is available. The other, which I'd argue are the most famous ones, are the Kwetu student accommodations. I mean, I usually see on Twitter people saying that, the guy of Kwetu ako mafutani sana. He never lacks. Even when the economy is down, he's just building properties. The truth is, he's raising money from the public, from the capital markets. So those Kwetu hostels are in a REIT. So they come and raise money from people, use that money to build hostels. Then after they build hostels, they charge rent. So the rent goes back to the investors. So Kwetu hostels are also part of a REIT. It's called the Econ D-REIT and I-REIT. So that is another one that is available in the market. And the youngest one it was done by a pension fund called Lab Trust. It's called the Lab Trust I-REIT. Of the 4, I'd say the 3, the Fahari and the Econ ones are ready to invest. The way to invest about it is you can either go to them directly and ask them to provide you with that, but their shares are tradable they're not tradable on the main exchange, but we have offered, as NSE, we have offered a platform to which you can buy and sell into this. It's called the NSE USP, Unquoted Securities Platform. So let's say, for example, student accommodation. It collects rents. How often does it pay dividends is the other question. So now dividend payment is usually different on a REIT-to-REIT basis. Others pay the dividend like any companies at the end of the year. So once they've balanced their books, they've said, this is the rent we collected, this is the expenses. So the net distributions, they pay at the end of the year. Others like Kwetu usually pay at least twice a year. So even companies on the exchange, sometimes some pay an interim dividend and then a final dividend. So for those ones, that's how you earn your money. So in more developed markets, what we've seen and what we are encouraging more people to do is in those markets we see REITs that pay dividends monthly, which is akin to how you'd collect rent. So I think in the fullness of time, you can see REITs in Kenya are still a young, growing market, but in the fullness of time, we'd want to encourage more REIT issuers and promoters to start mimicking that international model where payments are very regular. On the flip side, if you wanted your money today, how will you sell it? So the platform that I told you, USP, operates very similarly. It has its slight nuances, but operates very similarly to the shares market. So if you want to buy shares today, what you do, you call your investment bank or you call your broker. They help you open a CDSC account, you deposit money, very straightforward. So you see some of them now even have apps that are very straightforward. And as an industry, even in NSE, we have an app called Dosika. I'm sure even people are hearing in the news another app to access NSE called NS Easy and all that. There are these platforms to access the market. So, but effectively, you'd engage your broker, they'd help you open a trading account, you deposit money, and you would buy. If you are selling, same process. Either inform your broker you want to sell, or you can come and sell yourself. And what happens is that when you say, listen, my 1 million shillings that I've invested in this restaurant to sell, they'll not be available to the market. So people in the market are able to see these 1 million shares in the REIT are available for trade. Then people give you bids, how much they are willing to buy it from you at. Then when you're selling, you're saying, I'm selling, the lowest I can go is that. When someone offers you a price that matches what you're selling, the trade happens and you get your money, they get the shares. Yeah, so that's how they trade. Let me answer what the risk is you are taking. Because if, say, for example, you have invested in those Kwetu student hostels, it means that if in this year, maybe there was no intake, maybe there was no accommodation, maybe student occupancy was at 50%, it means we'll get less money, 50%. But if it was at 100% occupation, it means we had more people paying rent, so we'll get a lot of money. Now, the interesting thing that we have about REITs that is different to companies is that when the properties have paid the net rentals to the REIT itself, the REIT has to distribute 80% of those net rentals to the investors as dividends. So you see when a company earns money, it's up to the company directors to decide whether or not they want to pay a dividend or not. But a REIT by law should pay a minimum of 80%. A REIT, actually, we've had an instance where a REIT chose to pay 100% as net rentals to investors as distributions. Island Fahari has done that previously. So you can see that it's by regulation, it's protecting shareholders because it's saying the REIT minimum, it has to pay out 80%. It can choose to pay higher. But obviously, for them, for whatever that, the size of dividend that you get is very dependent on how much tenants they have. Because if you had less tenants and they still pay you 80%, it will still be a less amount. If they had 100% tenants, they pay you 80%, it's a higher amount. So the real risk you're taking is on the tenancy, or in the case where we use the money, in the development REIT where the money was used to develop property, is when you sold those buildings, if you sold at a high price, you see that's the profit for you. You built low, you sell high. So those are it's dependent on how much profit margin you got from selling what you developed. So those are the mechanics of it, and that's the simple description.
Among the notable attendees was Mr. Ogas Sheikh Mohammed, the chairman of the Capital Markets Authority, who added great value by his presence, supporting the discussions that unfolded throughout the event.
I think this session here today has been put together because of interest in the Islamic finance market, especially when it comes to property, when it comes to real estate investment trusts. As we know, the traditional market as we know it today, real estate is one of the biggest investment tools, whether it is in development or whether it is in land. The question of how to bring it into a structured market like the NSC for trading in form of shares, and in terms of making sure that there's a reliable mechanism for trading in these assets, that's where the trusts come in. As far as Islamic finance is concerned, I think there's a pool of investors out there trying to create avenues where they can invest in an ethical, Sharia-compliant mechanisms, and today's emphasis is on that. So we're trying to amplify what has been achieved up to now and what is the way forward as far as Islamic finance in the real estate investment trusts is concerned. I have a call to our community, and that is that the traditional mechanisms have worked for us for some time, which is basically either come together as a group, or get a loan to do development, get a stream of income through rental, and so forth. But there is a better way, and that is the rallying call today, that through real estate investment trusts, they are able to actually mobilize more resources, even in a way that's cheaper, more risk-free, with especially the incentives from government, which is basically the tax-free environment, no VAT, no corporate tax, no stamp duty. So there are few tax incentives as well. So the tax incentives are there, the market is ready for them. You can pool resources together in a way that you might not be able to scale on your own in terms of looking for partnerships. As you know, the Islamic finance market is based on contracts. We have, sell contracts, we have lease contracts, we have partnership contracts, agency contracts. So the various contracts are in place. The market is growing. The NSC is ready to actually develop this market in terms of the shares trading. And we, as the CMA, as the regulating entity, together with other regulators, whether in the pension sector or wherever it is. So this is basically the new way to do things. So what we're telling our community is to come together in a formalized market system, create these entities, come to the market and raise money through the market in order to be able to do it in a structured form.
Salam alaikum. Now we're going to take a short commercial break. When we're back, we've got more with REITs. Stay tuned. And welcome back to Property Focus, my property lovers and my Muslim brothers and sisters. Now, we're looking at Islamic REITs and Sharia-compliant REITs. Why don't you come along with me into the summit to find out a bit more about the distinct differences between these two. Let's go. Next, Dr. Mohammed Saliani from Araf Consultants Limited gave us an overview of Islamic finance principles and their alignment with real estate investment. His insights into permissible Sharia-compliant properties provided clarity on how we can invest ethically and in accordance with our faith.
A sukuk is an Islamic bond, and in simplified format of understanding. It's an Islamic bond, and it can be used to generate incomes or generate funds for multiple or diverse types of projects. So the history of sukuk lies back all the way down to the 1980s, and the first one was actually generated in Malaysia for approximately around $33 million in the 1983-1990 region, more towards the energy sector. The funds were created or generated to now be pumped into generation of fuel generating products and be able to serve the market in that area. And subsequently from then, the sukuk has actually become a $1 trillion industry, and we're expecting it to pass that $1 trillion in the year 2025. As hukuk has just developed over the period of time since 1983, the market has actually become so robust and so huge that countries like Oman, UAE, Malaysia, Singapore, Australia, even Switzerland and the US, including the UK market, have just been aggressive about generating or setting up these sukuks because they've realized that it's extremely ethical, it's very, very transparent, and the funds being generated in that are green, are ethical, and are halal investments, as we call them. When we look at 1400 years ago, sukuk is basically certificate of ownership. When 1400 years ago, Prophet Muhammad, peace be upon him, at that time when there was wealth being generated or then there was a necessity being required, all these funds were now pooled in. Now, at that time there were caliphs and the like, the caliphate, which was at that time the leaders of that time, they came up together and said, okay, fine, if we are generating to do up something as a good deed, all right, why don't we pool in, and if it's an investment, let each one get an equal undivided return, an equal undivided return for the certificate of ownership they own for their investment. So when at that time is when now the sukuk originally started. Now, when that structure was created, eventually subsequently after that is when the profits were then distributed to all people who are holding the certificate. Today we're doing, and we've been invited from the REITs Association of Kenya, whereby we are bringing up knowledge and market awareness about Islamic REITs. Islamic REITs being Sharia compliant and Islamic halal investments into real estate, whereby property developers can bring in their proposals as originators and promoters to look at going to market to bring out their real estate and making sure that the market and the public are able to benefit from real estate investments through the REIT platform.
Following Mr. Nthiga, we heard from Mr. Abdullahi Hussein of CPF Financial Services, who provided a perspective on the Sharia-compliant considerations for institutional investors.
We've come here basically to see what products are offered in the market, especially in the REIT sector. As you know that we manage pension from various people across the country and institutions. We have a lot of funds that we need to manage. Especially liquidity management has become the biggest problem because Sharia compliant investment vehicles are a bit limited in the country. And what we are trying to do now is look for avenues where we can invest money and give us better returns. And REITs, I think, is one of the areas we need to explore more. We can see that there are new products coming into the market. And with what we've learned today here is that there are more players coming into the market. And I think the most important bit now is to make sure that we have it right and it gives us better returns. So for us, it's liquidity management. We are here just to look at who we can partner with or who we can work with to make sure that we deliver the best returns to our members.
My name is Irongo Wagema. I'm the treasurer of the REITs Association of Kenya, and today we are delighted to have held the executive breakfast on Islamic finance, which was really looking to spotlight on the opportunity that is available in REITs, especially when it comes to Islamic finance and ethical investments. It is very interesting to note the amount of wealth that is available there, even from what we call the GCC. This is the Gulf countries, where there is a lot of money that is there available even for Islamic finance. So we have over 3 trillion that is available, that is looking for good investments that people can actually get to invest in. So in terms of today, I also saw we have CPF, they have a pension fund that has 6 billion that is available even for such investments. So we want to encourage more people to be able to uptake some of these finances and opportunities, and especially because we are looking at how can we be able to still use the different investments to develop the real economy. So we are really keen on how we can be able to bring funds and channel them to the real economy. The pension funds say they are ready. We have people who are educated and who are enlightened on these different opportunities. So we are really keen on, as an association, to bring that awareness so that people can really realize the opportunity that is available. We had the Lindsay Sukuk, which was a landmark investment and also a listing on the NSE and quoted securities platform, but we are looking for more so that people can also have more opportunities to invest. I have a dual role in the NSE. I'm the business development sector leader for agriculture, and also even from a REITs point of view, we also want to encourage other people to be able to do issuances. We have warehousing REITs that will be coming, that will be very critical, especially infrastructure in agri, that can help people to be able to raise money and also unlock money that is locked. In terms of, instead of locking property in a factory or something, why don't you issue a REIT? The REIT unlocks that money, and then you're able to maybe grow your business and do other things. So we want to encourage different people. I think it's about time where we have agricultural REITs.
Hi, my name is Ikran Omar, a content creator. I'm mostly on Instagram and TikTok, and today's REITs event has been very insightful. I have learned so much, including the difference between Sharia-compliant REITs and Islamic REITs. I'm Muslim and I didn't even know those two things are completely different, so it made me want to dive more into the world of Islamic finance. And now that at least we're having more products that are friendly for the Muslim population, which makes me very happy, I can't wait to see where this space takes us.
Our closing presentation focused on the future of Sharia-compliant REITs in Kenya, featuring insights from Ms. Faria Jama, an expert leader who shared valuable case studies and explored regulatory pathways to unlock the full potential of Sharia-compliant investments in our markets.
Many people get to confuse the two. Sharia-compliant REIT and what are Islamic REIT. So when you hear about Sharia-compliant, is basically a product that has just been having, it has to meet a certain threshold, and this threshold means that you have the threshold that you have been given. You have followed the rules that were given. But it does not mean that you have fully followed every rule that is there. So, for example, if you are going to a restaurant and you have all the food given to you, so how it's cooked, how was it cleaned and all that. So if you have met, or you've met the threshold of cleaning, you've met the threshold that all these food are halal, then now that one you can say you're compliant. So when you see a word compliant, means that it has just met the requirements. And some of the Sharia compliant requirements are: one, it should not be involved with interest, gambling, it should not have anything to do with a brothel or any non-permissible activities that are haram. And now with an Islamic REIT, it's basically that the foundation completely has been set up to follow the Sharia rules from the onset, from where it started to how it's growing, how it's run, from how you hire people, the contracts, there's no injustice, you're transparent. So it's totally different. It doesn't mean you're being compliant, it means that you are showing people that we follow all the Sharia laws and we do not have anything that is non-permissible in this whole business activity and project. Yeah. So I hope this makes everyone who's been confusing the two understand this concept.
As we wrap up the summit, I'd like to highlight the presence of Mr. Geoffrey Odundo, the former chairman of the Nairobi Securities Exchange, who now takes on the role of CEO here at Nation Media Group. His valuable insight into the myriad benefits of investing in REITs, such as the collective investment benefit, liquidity, and diversification of risk, resonated strongly throughout the discussions today. Congratulations to you, Mr. Geoffrey, on this exciting new chapter. As we wrap up today's episode of Property Focus, I want to thank you for joining us as we explored the exciting world of Sharia-compliant investments and their opportunities within real estate investment trusts. We've had an insightful discussion and learned about the importance of ethical investing that aligns with our values. Thank you to our esteemed speakers and everybody for tuning in. Be sure to tune in for more enlightening topics in the future. Until next time, I'm your host, Peter Ngigi. Stay inspired and may your investments be blessed. Happy Easter.